And we're live.
Awesome. Good evening, everyone. And thank you for joining me for another Facebook Live where I get to sit with VIPs and discuss all things real estate. Now, today's topic is foreclosure forecast. So I have Justin Fordham here with me, and then I have real estate attorney Daryl Scipio. But before we get into my guest and today's topic, I want to take some time to discuss Arkad Capital as a company and, of course, introduce myself because we do get a lot of new listeners sometimes. So it's always a nice refresh in the beginning. Now, Arkad Capital is the creation of 3 real estate entrepreneurs who have been in the business for over 15 years. We have Mario Camino, Daniel Rivera, and Adam Levine, and their constant pursuit of higher real estate investment performance. Like I said before, they've been flipping, rehabbing, developing for the last 15 years. So we understand the business from a different perspective. We're not just lenders. We actually get what you're going through. Now, about 3 years ago, is when we realized that there was a need within the hard money lending industry. And we decided to open up this new venture that is called Arkad Capital. And now we're able to offer really good rates to even first timers. I remember when I first started with the company, first timers had to put about 30% down. Times have changed so much. You could definitely get in with lower than that. We're from 15, 20% down. I'm seeing more 15% down. So definitely don't hesitate to reach out to us. We can be reached at arkadcapital.com. So check that out. And just getting into myself, I am also a real estate agent. I was born in Costa Rica. I migrated to the United States when I was 9 years old. So any Hispanics, feel free to reach out. I can help you too. We speak English and Spanish. And I have my bachelor's degree in accounting. After working in corporate America for 7 years is when I decided to do a shift in my career. And now I'm dedicated in helping and educating investors really scale their business to the next level. I am the head of business development for Arkad Capital, and I'm very easy to access. So you can reach out to me through Facebook, and I'll leave you guys details a little bit later on. But without further ado, I do want my guests to do a quick intro on themselves. So let's start with you, Justin. Wait, Justin, your mic is on mute.
Oh, you had me muted there. Okay, there we go. Can you hear me better now?
Yes, we're good. We can hear you. Thank you.
Cool. Hi, my name is Justin Fordham. I'm a realtor with Realty One Group in New Jersey. I'm a licensed realtor in New Jersey, and it's doing great over here in my market. I can't really complain.
Awesome. And can we just jump right into Daryl, the attorney, real estate attorney?
Good afternoon, everyone. I'm Daryl Scipio, real estate attorney. My office is in Newark, New Jersey. I work with first-time home buyers and sellers, developers. I do bankruptcies, tax appeals. Anything real estate related is in my wheelhouse. Thank you for having me today.
Thank you so much, both of you guys, for joining me today. I'm super excited to be doing this with both of you guys. I feel like you'll have a lot of good nuggets to share with everyone. So thank you again for joining me. And now let's jump into some of the questions that I have here as it relates to our topic. So the first question I have, which is probably going to be geared to Justin, but again, Daryl, if anytime throughout the chat that we have here, you want to put in your 2 cents, definitely don't hesitate. So now the housing market, when it comes to delinquencies, what are you seeing for this year, for 2021?
So right now, post-pandemic, I see delinquencies as being up. They're up about way more than 30% from what it used to be about a year ago. Pre-pandemic, it was very great. The numbers were great. And then COVID hit, and then those numbers took a dip. But right now, swinging out of it, I do see a lot of those numbers coming up in our area.
Okay. And now when you say our area, and I just want to be clear because we do have lists in different states, what areas are you speaking of?
So for my area, I cover northern New Jersey. That's Essex County, Hudson County, and also Bergen County. And we're seeing a large influx of buyers coming in into our area with everything that's going on. A lot of people have left New York, have left Connecticut, and also PA as well. And all of them are migrating to Jersey, actually northern Jersey to be exact. Union County is very up and coming as well. And it's just been a great boom for us. As of late, while I do know other areas have taken a hit, we haven't. We've pretty much towed the course, especially with Newark leading the way. Newark is pretty much, it's been up 20% from what it used to be about a year ago. So that's where a lot of the growth is going right now. So while I do understand a lot of areas are taking hits, we're pretty much going right now.
Awesome. So it must be going really good for you on the real estate side.
Yeah, sort of, kind of. I mean, working with, Arkad Capital, of course, you guys provide capital to investors. So that's a large part of it. I mean, we couldn't do what we do without you guys. So it kind of works hand in hand. So yeah.
Absolutely. I could definitely agree there. Now, give us a little insight on the rental market versus single family homes. Are you seeing a shift there? Any changes?
So for the most part, the multifamily markets are up. It is harder right now. Inventory is relatively low, but single families are coming in due to the fact that some people can't actually hold a mortgage for the home. And in that event, some people are actually getting creative in these times and saying, hey, we'll rent to own. So I do see more multifamilies being rented quicker. But the single families are, there is a market there for the rentals as well for some.
Got it. Now, is the housing supply increasing from what you're seeing?
That's a tough question. So on one part, it is increasing in the sense that we do know that there will be foreclosures coming on down the line. But right now, with the moratoriums and everything in place, we know that that's going to be at a slow. But there are properties that are available, but due to the fact that I can only speak to my region, we can't, if it's priced right on the market, it's going to be a 30 to 45 day window from the time that you list it to sell. In other areas, it's going to be anywhere from 30 to 90 days. But due to just my demographic of Hudson and Essex counties, if priced right, it will go from 30 to 45 days from completion if you were to renovate a home and put it on the market to sell.
And now for non-renovated homes, are you seeing that they're going quick too because of the interest rates?
For interest rates, yes. I do see them going quick. It's just a matter of how you gauge it. It's one for the multifamilies. The rates that are going now are lower than previous times. So a lot of people are targeting the multifamilies first. If they can't get a multifamily, then they'll go after the single family. But I do see a large inventory of things coming, and that'll be a later part of the forecast that I'll give you later in the foreclosure forecast. Sorry.
Absolutely. Now, what are you seeing as far as the Department of Housing and Urban Developments?
Okay, so HUD is putting in place a lot of moratoriums. Of course, they want to uphold. They don't want to see anyone out of their homes. As of right now, they are not looking to foreclose on anything. So you can look for HUD to be getting back to everyone. I would say late July is what they're looking to revisit to see what they can do to help to alleviate some things. I do see some rates still staying steady so that they can help new buyers, new first-time home buyers to come along. So look for HUD to be getting back to us, I would say late July, early August.
Early August. Okay, got it. Now, do you anticipate a market crash coming? Like, what are your predictions? Do you see any signs of like us recovering from the pandemic? Like, how is that going to affect the housing market?
That's a twofold question. Okay, so for my market, of course, we aren't hit, but for other markets, of course, we're on Facebook Live, and we do know that there are um, other parts of the country as well. And I do have a lot of other realtors that I deal with. So let's take, for instance, Miami. Southern Miami is an area that's going to be ripe for development. Right now, we have a lot of companies, a lot of different places that have moved from California to Miami. So that's an area where if Miami was operating at, let's say, 70% pre-pandemic, now that things are lightening up and a lot of businesses are resuming, they're going to go from, like, let's say, about 80 to 85%. That's due to a lot of companies coming into the area. So as people migrate from one place to another, they'll help to improve certain areas that are down. But that's going to be allowable due to your government in those areas. Certain Republican states haven't been hit, whereas certain Democratic states have been hit. The mixture of the two, with one leaving from, let's say, California is a highly dominant Democratic state. Let's say if they leave, a large people from influx left from California going to Texas. So that's a rare mix. You'll have a large group of people who are more ready for a boom per se, as opposed to the stagnancy that there was. You have an increase of over 50,000 people per every quarter moving from Texas to, from California to Texas. So as we move around and as everybody settles where they are and as companies see where the growth will be, I think that'll dictate a lot of where the real estate booms will be. Because where companies go and the money goes, that's where real estate follows. So I'm optimistic about the outlook.
Got it. What do you think, Daryl?
Well, the Fed is, really doing his best to prop up the U.S. market. He's reduced interest rates to super duper low. And, based on his comments yesterday, he didn't see inflation becoming an issue in the near term. And, I would have to agree with that. I think it's going to take a long time for us to reach the type of inflation that we were seeing in the 70s during the Carter administration, when people were lined up for miles to put gas in their car.
Right.
So, I think that those fears are a little premature. I do see a lot of activity with regards to buying and selling. Sellers in certain markets are getting, the most that they ever could have imagined for their home during this time period. And buyers are getting the lowest interest rates that they can get. I just did a closing with a buyer who, did a loan with Bank of America, and the interest rate was 1.5%, on a 30-year mortgage. So with interest rates like that, you're going to see a lot of buyers. I see a lot of refis as well, because of interest rates. So, I think that we're okay in the short term, but in the long term, I think that it would take for a sustained period of economic depression in order for us to see a real problem.
Now, I do feel like these rates, these extremely low rates that we're seeing are not going to stick around for too long. So what are you guys' thought in terms of like, how long do you think we're going to see this for?
I see it for at least, it has to be for another 3 years. It has to be, because there's no way you can expect us to go back to normalcy right away and not see optimism. Like, if we all look at this has been cyclical before. I think we've had a boom and bust. We always have boom and bust cycles. But I think investors are smart enough now to know and say, okay, well, if this is going to be a bust, I'm going to get in and I'm going to buy properties. I'm going to look at what's going on now because it's the best time to buy when the rates are low. I see it as being a 3-year cycle. I think it'll be this way for the next 3 years where we'll be able to get these types of rates.
What about?
I don't see, oh, sorry.
No. I was going to go to you too.
Yeah, I agree. I don't think that we'll see any changes on that front until at least 2024.
Okay, interesting. Okay, that's good. Now, do you feel like the housing demand is growing? And this question might be more for you, Justin.
I do, mainly because right now, let's say for Jersey City, I'm running out of space. Like there's nowhere that we can go right now. Building is very rampant. So for like New Jersey, East Coast area, I would say so. Yeah.
Okay. Now, I want to take a quick pause for all of our listeners and just give you guys a little bonus that we're doing here at Arkad. Anyone who is interested in obtaining a list of foreclosures in your area, what we're doing is if you go to our website and you enter in your information, you can type in up to 3 zip codes, I believe, and we will send you a list of foreclosures in your area. So again, anyone listening who is interested in that market, go to our website and certainly put in your information so that you can get that free list of foreclosures in your area. Now I'm going to go back to the questions that I have. Now, what can you tell us about the current vacancy rates? And this is more for Justin.
Okay. So current vacancy rates for my area, I would say, more specific, are relatively low. They're in the teens right now from what I'm looking at from my report. There isn't a place where you can't really find available. It's very hard. A lot of New Yorkers are coming over. So we are currently always trying to fill. It's very, very, very high.
Okay. Now, hold on, let's see, because I have someone who asked a question. Let me just check it. One second. I want to see if it's targeted to what we just said. Oh no, they want to know what's our website. So I'm gonna put it in the chat. But if you go to Arkad, ARKAD, you'll be able to obtain that list, as I said before. Okay. Now let me jump back to the question that we had here. Now, are you seeing something different for rentals versus single family?
In terms of, can you hear me?
Yes, can you hear me?
Sure, I got you. You said, am I seeing something different from single families versus rentals?
Yes, going back to the same question regarding vacancy rates.
In terms of, okay, so I'm sorry. So in terms of the vacancy rates for single families, you mean in terms of like a foreclosure basis, in terms of what is there in terms of the vacancy? I'm sorry, availability for those vacancies?
Yes.
To be purchased?
Yes.
Okay, so there is a higher inventory of single families than they are the multifamilies, which is what's making single families right now, once those moratoriums lift, a luxury.
Got it. Now, would you personally invest in single family right now? Okay,
I would. Being that the rates are low, I would. If you can get one in the right condition and you don't have to put much into it, you can put that on the market and flip that within 30 to 90 days if you do it the right way, if done correctly.
That's in the same areas that you cover, obviously.
Correct.
What about Daryl? Would you invest in single family right now?
Absolutely. I mean, I think the single family market is booming. You know, there's more millennials than baby boomers. You know, they're going to, because of that, they're driving single family home sales. And it's it's growing, particularly from people that are trying to move from expensive cities, and for folks that are trying to start families. They want to purchase a home in a more suburban area. So that trend is it's moving in an upward direction. So I think single family is going to keep moving in that upward direction.
Okay, got it. Now, what are you seeing, Justin, in terms of home ownership rates?
In terms of home ownership rates, did you mean in terms of finance, or you mean APR? What exactly?
No, like just in terms of home ownership rates, like as a realtor, do you feel like the home ownership rates are going up, down? What are you seeing in your particular market? Are people wanting to buy right now, or are they just too scared about the uncertainties and saying, you know what, I'm not gonna buy? Or even
so I can't. Okay, so for my area, for Northern New Jersey, there's a high one. Buyers are coming in left and right. We are up just this quarter alone. I would say I'm up more so 15% in terms of where I was last year, obviously with the pandemic, but we are up right now in terms of homeowners, and in terms of people wanting to buy homes. Also, investors are there, especially with the scarcity in inventory. When properties do become available, people look to buy and right away. So there is a buy in my area, I would say that.
Got it. Awesome. I think that makes sense too. And I could agree with you because I'm seeing the same thing within those areas.
How about Union area? So I know I'm only speaking relative to my area, but for you, what do you see in your market? I know you cover like Union, let's say Morris County area. What do you see?
Same. This area is super hot. I live in Union, and the houses don't last.
Okay.
Like they really go quickly, and even right now with everything that's happening, people are buying. My investors are hungry.
Okay.
And even people that are not investors, just regular buyers, they're buying. So I definitely agree with you and what you're saying.
I just got an email in from one of my guys who told me to mention that Miami and also Georgia is still booming as well, and they're up about 10% from last year. So the states that didn't really close down are still going. The states that did are now in that the rebound.
For sure, for sure. Again, people, go to our website, Arkad.Capital. I put it on the chat, but I figured for anyone who's probably listening to the audio and obviously doesn't get to see it, go to Arkad.Capital, and you can type in 3 zip codes after you give us your information, and we will send you a list of foreclosures in your area. So definitely take advantage of that. You're pretty much getting free info. I like free. So let's get that going. Also, what are some home price expectations that you expect to see with everything that's going on?
You said home prices?
Yeah, home price expectations.
I definitely see prices going up about a good 5% throughout the rest of this year. Being that the fact that the market is relatively up in my area. Yeah, I see that. I also see multifamilies getting a lot more expensive as well, being that inventory is low. Once the moratorium hits, we'll really see the value. So hopefully if the rates, flow steady, we'll still be able to see those sales coast out.
Absolutely. Daryl, any thoughts on that? Based on the paperwork that you see, I guess.
Yeah, I mean, based on all indications, I would say that, 5% that Justin was talking about might be near the low end with regards to price growth. There's no indication that price growth is going to slow down. I think in and then in the next year, you're going to see prices go up probably by about 10%. You know, I did a deal recently where in 2019, the house appraised for $175,000, and at the end of 2020, that same house sold for $305,000, and there were no renovations that took place at all. Well, actually, that's not true. The homeowner had a fire in the garage and had to rebuild the garage, and that was it. So, you know, I mean, obviously, the garage wasn't the reason for you know, $125,000 appraisal, but you know, that's one nice garage if that's the case.
I was just gonna say that. Man, I want to see that garage. And what area was that in, if you don't mind sharing?
Oh yeah, no, that was in East Orange, New Jersey.
East Orange, that's an up and coming area too.
I agree.
Yeah, it's always been, but yeah,
it's a hot market right now, as they say.
Yeah,
absolutely. I could definitely agree with you. Now, Justin, this question's for you, and it is a direct question, but I do have to ask, like, is it a good time to buy or sell?
Okay, so if you are low, you know, you don't own your home, it might be a good time for you to sell. You know, but if you know, are an investor, you know, and you're looking to see a return on your money, and you know, you have a nice multifamily, then it might be a good time to hold. So it depends on your position and your investment and how you're protecting the asset.
I agree. I say always reference back to your numbers and what makes sense based on those numbers, not anything emotional.
Yeah. The margin is always there, you know. So for me, like how I invest, or if I buy properties, there's properties that you want to buy to hold, and then there's properties that you buy and flip. So
absolutely. Daryl, you had something to say. You look like you're thinking.
Oh yeah, when I start thinking, I get this crazy look on my face. But yeah, I mean, I think it's a good time to buy and sell. You know, if home values are going up 10% and interest rates are, you know, super low, then it's you know, you can't lose buying or selling.
Agree.
I have a question for you though. Do you think it's a good time to build, Karen?
Absolutely. It's always opportunities. And I'm very happy that when it comes to our investors, I would say a portion of them are still active right now, despite the fact that some people feel like the home prices are high. They're still making deals happen. And that just fills me up so much, because that just comes to show that there's still opportunities. You just have to look for them.
Right.
Can't expect things to just be handed to you, and it's not always going to be easy, but the opportunities are there. You just have to take them. So I'm, like I said, I'm very happy to see our investors doing their flips and coming back to do more. We get a lot of repeat borrowers, and it has a lot to say with not just the opportunities that they're getting, but also the really good rates that we have to offer here. In your experience, you know, you're putting 10% down and you're getting a really low interest rate on top of that. And then not to add, you know, just the perks and the customer service that comes on our side. Right. So I'm not complaining. For sure. Now, do you guys have any suggestions for specific strategies for investors? And I want this question for both of you guys, because Daryl, I know that you as an attorney, what would you suggest for investors that are looking at properties that may not be vacant? What are you know, how should they strategize properly? And Justin, you too, just in general.
Yeah, that's a two-pronged approach, but I think I'll let Daryl lead with that one.
Okay.
When you say may not be vacant, do you mean a property that where a homeowner is living there, or a property that has renters?
That's tough right now.
Yes,
that's tough for us right now.
Renters and where where it's currently being occupied, because I do see some properties online, obviously, and it says that it's not vacant. So how should a investor strategize properly to take the proper, caution in these times? Because we are in a pandemic and they can't just kick them out.
Right.
Right, right. I think the investor has to find a way so that the person that's occupying the residence wants to leave. So you have to, I guess, think as an investor, what would make this person want to get out of this unit, and what would make me want to get out of this unit. There's a couple of things. You may have to find out, if there's damages to the unit that could be unsafe to the occupant, and let them know. You can also, offer that occupant, an opportunity to live somewhere else that's a better deal than where they're living now currently. So that could be, offering them
Cash for keys.
Cash for keys. That's a tried and true tactic that's used, that's very successful. So yeah, things like that I think could be helpful, and that's probably your best bet. I don't see I don't see you doing anything else that would make a lot of sense in that instance.
So from an attorney standpoint, are you seeing a lot of that going on, like the cash for keys situation? Or else?
What I mean, I'm seeing I'm seeing that, but I'm also seeing a lot of subject to deals where the occupant is allowed to stay, and the investor works something out with that occupant, so that when things do calm down with regards to the pandemic, then the investor can present more options to that occupant, and that occupant could spend some time in the property during the pandemic, figuring out their best options, so that you don't have to move right now, but you'll agree to move out in 6 months or in a year, or when I sell the property.
Absolutely. No, that makes sense. And Justin, would you have any particular suggestions for investors and, sourcing deals, or like how should they go about it with our current climate? And when I say that, I mean, obviously the pandemic.
Okay, so with our current climate, I mean, right now we got 3.6 million loans that are like way past due right now. So it's two ways that you can look at it. As an investor, you can be strategic and you can go about attacking that in the pre-foreclosure stage. You know what I mean? There's so many different ways that you can go about it. But in terms of what I think one should do, you should, one, have staying power. Two, you should definitely have a good funder in hand, such as Arkad. Three, I would target areas that are of interest and that are booming. I wouldn't stay stagnant. I wouldn't stay in areas that are, people are leaving. Obviously, there may be some deals there. When people are leaving from one place to another, you have a situation where you have a buyer who may be willing to sell at a lower price than others. So you may have a motivated seller. So I would just go where the deals are if I'm an investor. Outside of my market, from what I know, Texas, Florida, Georgia, Chicago, those are areas that are thriving still, and that are going to be in a rebound. I would target areas that would have to take on and have to facilitate the extra people moving into that area. So there's going to be growth and development in the areas and states that I talked about. If you're local and you're in the tri-state area, I would have a high interest in Newark. I would have a high interest in East Orange, anywhere in Essex County, Hudson counties, Bergen counties. I mean, New Jersey is just a great state. We just have a blend of a little bit of everything. So I am kind of biased, but to all of my investors nationwide and wherever, I do understand those other pockets are available. You know, so I would just go where growth and investment is. Just to be quite honest, I mean, Austin is a great city. It's one that I've had to visit within the last couple of months. I see the growth there. Since then, there's a lot of companies that have gone there. Even Elon Musk has said, hey, look, this is like the next boom town. So I know a lot of other investors who've actually gone there and said, hey, look, we're going to shut up shop. We were going to, you know, build or either buy or renovate some of the old spaces to help to accommodate for new people to come in. So I would tell investors that there's opportunities there. You just have to look for them.
I agree. And I just want to take a quick moment to address a question. I feel like, so Luis Nunez, or Muniz, sorry. Pardon me if I'm saying it wrong. He's asking, is it factual that evictions based on damages will be enforced? Or is it any kind of evictions? And that might be more geared to Daryl.
Yeah, based on what I'm seeing, we're seeing a lot more evictions based on damages being enforced. So, you know, if you want to file that eviction, go ahead and file it and make sure that your facts are more than just about non-payment of rent. You know, if there's a dangerous situation where one of the tenants is threatening or assaulting another tenant, you can have that eviction go through right now. You know, situations of domestic violence, also damages to property, those evictions on a case-by-case basis are being heard and ruled on. So, you know, you know, as far as the general public knows, there's a blanket moratorium, but if you have a special circumstance, you know, by all means, file that eviction.
And what's the turnaround time for these evictions? Is it happening like normal? Like right now?
It's not happening like normal. There's still some sort of delay, but you know, it's being heard in some sort of queue that the court system has set up.
Got it. So it's still worth it to proceed and do what you need to do. Awesome. Now, hold on 1 second. I have another question. Are you saying that this is for foreclosures? That's probably for Justin, but feel free, either one of you, to answer.
I'm sorry, you just went out. I didn't hear your question.
Okay, hold on 1 second. So the next question is, hold on. Did I lose it? Okay, I think I lost the question, but I think it said, are you saying that it's good to invest in Texas? I believe that's what I read.
Yes. Yeah, I would. Town specifically would be, if it were me and I'm gonna, you know, not that I would give my professional advice, but if it were just me, and I'm looking, like, let's say if you're looking for northern Texas, you're looking for Dallas, Fort Worth area. Well, there's towns that are going to be like in the outlying areas. So if I knew I wanted to live in Dallas, I would live on the outside of Dallas, let's say a suburb, Plano or Addison. If I wanted to go southern Texas and I wanted to be in Austin area, there's other little towns that are booming that are going to be around, that are coming up. So I would look at where I can buy as cheap as I possibly can so that the asset can appreciate as much as it possibly can. So in those northern and southern areas would be a point of where investment I would invest.
All right, 1 second. I got another one, but I don't know how I'm losing these questions. My apologies, guys. I don't see it. I know Ramal sent it, so if he can just send it one more time, my apology. So I'm gonna ask the question of today.
Okay, I have it from
Oh,
Romal
you
right
have,
here. I got it. Yeah,
okay.
he says he was joking. He says in Texas they foreclose by lethal injection.
Oh,
That's what he was saying. No, they
oh,
don't
okay.
actually. They don't. And their foreclosure laws are actually very straightforward. It's a lot less, than other states. So I say definitely do your research because not every state and every jurisdiction has a different way of how they go about executing foreclosures. So while Jersey may do it one way, we have about 17 different counties that do it their own each way. So be mindful of where you're investing in those laws.
That's absolutely true. That's absolutely true. So the question of the day is going to be, does the forecast currently call for a foreclosure crisis?
Well, okay. So out of, let's say, 3 to 4 million homes that are going into foreclosure, there may be about half of those that are actually warranted that may have gone either which way, pandemic or not. So in the instance that those go to full fruition, that's an opportunity for one to capitalize and purchase that property at a cheaper price than you normally would the market. But I do see a lot of competition now, being the fact that inventory was at, an all-time low. Now it's just appreciating. So everybody's going to be trying to outbid one another. But within that process, you just have to be mindful of how you're bidding. You don't want to outbid the asset and have to, go in at an over as opposed to an under.
Absolutely. I could agree. Daryl, your thoughts?
The optimist in me thinks that there'll be some sort of federal legislation that compels the lenders to allow all those folks in foreclosure some sort of program, where, for instance, they can take what's in arrears and, tack it onto the back of their loan and just start paying their monthly mortgage again. So I think that at least a third of the folks in foreclosure are going to take advantage of that opportunity. And, for the rest of the folks, yeah, it's going to be a major issue. And, if they can't work something out, then, it's a great opportunity for investors and people with cash to get some of these homes at basement bargain prices. And I know a lot of investors that are trying to be that are positioning themselves so that they're really cash heavy, so for the next 24 months or so that they can scoop up some of the bargains that they anticipate coming to the market.
I agree. And that's kind of like where we come in too, because Arkad is going to be able to help you fund those deals that are going to be available. Someone in the chat asked, how can you get started with Arkad? So it's actually very easy. Again, go to our website, arkad.capital, and you will be able to fill out an application there. You can reach out to myself, Mario Camino, Adam, Christine, Daniel, any one of us, and we will help you go through the process. Like I said, it's super easy to get yourself approved, and we can have a conversation and just come up with a strategy, because when the truth is, when all these opportunities become more available and there are more houses, available for investors to buy, you're going to need hard money. You're going to need hard money, and what better time to scale than now, right? So get yourself approved now and start looking for opportunities. And as even more things open up, you'll already be set, because you'll already have yourself approved in our system. Again, go to arkad.capital and we will be more than happy to help out. And if you want that list that I was telling you guys about, go to Arkad Capital and put in your information. You can put up to 3 zip codes. And when you put in 3 zip codes, we will send you the list of foreclosures in your area. Now, the second part to that question was, what do they need? Well, you really just need to fill out the application. We're going to look at credit. We're going to look at your background, and you take it from there. What's the minimum credit score? Well, we can go as low as 620. If you're at 650, I love you. 650 or above. So let's jump on a call. Let's see what your particular situation is, and we can take it from there. Let's see. It said, oh my God, unheard of. Romel, you're too funny. I love it. So before we go, I do want to talk about that. So these guys have a project that they want to share that made it to the Forbes list, right? Forbes.com, actually. So can you guys share a little bit of light on that?
Sure. Daryl, you want to start?
Sure. So we have a project that we're working on in Newark, and the project was mentioned in a Forbes article about residential apartment buildings that allow for tenants to generate revenue while they live there. And so the article highlighted 3 projects, and ours, happened to be one of them. And the article spoke about this model being really attractive, and sort of coming about from a need for tenants to benefit from their rental situations, because we know that for all of eternity, the only benefit to renting was the opportunity to live indoors for the tenant, and it's been enough since that. But so our project is it's for tenants that are looking to be homeowners. So what we would do is we would take 10% of each tenant's rent and save it and invest it conservatively for 3 to 5 years while that tenant is living in the apartment building. And after 3 to 5 years, and during that time period, we would provide credit repair, financial literacy courses, and first-time homebuyer education for the tenant. So, after that time period, they would know exactly how to be homeowners, and they would have the money for a down payment, closing costs, and a little extra to cushion the blow of spending a lot of cash to be a first-time home buyer. We're doing this project in Newark because in Newark, 75% of the residents in Newark are renters. So, we know that Newark would love to see more homeowners, paying those property taxes. Newark is a city that, like Baltimore, it was designed for a lot more. Newark was probably designed for about 500,000 people, and there's currently 275,000 people living there. So we're going to build a model in Newark, and it's going to be a small project. There'll be 39 units, and we're going to spend 2021 and 2022 building it, and it'll open its doors first quarter 2023. And so it will be the prototype for this type of housing to be opened up in many cities after Newark shows a proof of concept. So the other thing that we did with this project was we allowed for Newark residents and real estate investors that want to have an impact with their investment. folks that want to do well and do good at the same time. Impact investors can go to a website called 𝐍𝐚𝐭𝐢𝐲.𝐶O and invest in our project for as little as $1,000. And when you go to Small Change and you see our project, you'll see the video that's about our project. You could read our SEC disclosures about the project, and you can decide if that makes sense for you as an investor. We wanted to give Newark residents the chance to invest. Most times, the folks that live there, they just see buildings going up around them, and they don't know anything about the process. They're not involved in the process, and they had no chance to get in. So we'd like to change that paradigm also by giving folks the chance to be owners of a multifamily building in their neighborhood. So that's it in a nutshell. So if anyone's interested, please check out smallchange.co, and you'll see my face on the project. And in spite of that, you can click on the project and learn more about it and invest. And we thank you, Keren. You did a wonderful job today, and thank Arkad for giving us the chance to share our thoughts, about real estate and about our project. So thank you.
Absolutely. It was definitely a pleasure having both of you guys here. I feel like with this project that you guys have going on, it would be very good too if we added a segment to teach people who may want to be investors in real estate. And that's where we come in as Arkad. So let's have a talk outside of this. I'm definitely interested in helping you guys with that in any kind of way. So thank you to our listeners. I hope I answered all of the questions. Let me just double check. Hold on one second. Looks like we answered everything. They said, thank you so much. Awesome. So till next time, guys.
Definitely. Mario, Adam, see you guys.
Thank you.
Have a good one.
Take care.
Thank you. Take care. All right. Take care. Thank you.